welcome everyone. Very pleased to be sitting down today with Raj Grover, CEO of High Tide and an Echelon Q4 2022 top pick. We've covered High Tide since July of 2020. We've watched its remarkable growth over that period. The company recently just reported its fiscal Q3 results, which showed revenue growth of 98% year over year. It's had a spectacular growth trajectory. And so I'm very pleased to be sitting down with Raj here today to discuss High Tide and taking a more long-term and strategic overview of what's to come ahead for High Tide. So thank you very much, Raj, for joining me here today.
Thank you for having me over, Andrew, and for the very nice introduction to High Tide.
Great. So why don't we hop right into our questions? And the first question I'd like to pose to you, Raj, is on the discount club model. High Tide was really a pioneer of the discount club model in Canada, which it has now rolled out across the country. Could you maybe explain to our listeners what a discount club model is, how you developed it, and how you plan to continue adding and building upon the discount club model over the next 6 months, 1 year, and over the next 3 years?
Sure. So just over a year ago, we launched the first of its kind discount club concept for cannabis anywhere in the world, as per our knowledge. Through our Cabana Club loyalty program, we offer everyday exclusive benefits to our Cabana Club members. We now have over 825,000 members as of this morning, I checked, of our Cabana Club, which represent roughly 13% of the estimated Canadian cannabis population, Canadian cannabis users, excluding Quebec as per StatsCan data. So very excited about that. You know, that's a massive chunk of Canadian cannabis consumers in our Rolodex. And so our innovative discount club model is built on 4 main pillars of differentiation. And the first pillar is, and the main pillar is our unbeatable prices, which include our lowest price guarantee. So when a customer comes to our stores, they will see a market price for everything that we sell in the store. And then they will see a lower member price, but they have to be Cabana Club members to access those members-only prices. These members-only prices can range up to 25% off for cannabis and CBD products, and up to 80% off on consumption accessories. And then the second pillar is, of course, our consumption accessories expertise. Andrew, as you know, we've been in the accessories business since 2009, which was built over 50 trips of China personally. That I ventured on, and since making these trips and having this expertise, we now have over 5,000 cutting-edge consumption accessory SKUs in our portfolio, which most of which we design and manufacture ourselves. So because there's no middleman here, we're able to offer these products at unbeatable prices that no one else can beat us on, or no one else can compete with us on the accessories front. And this is why we also made a strategic decision to get out of the accessories business wholesale in North America and just focus on the consumers directly. The third pillar that we have is our white label rollout. So as you know, recently we have been rolling out Cabana Cannabis Co products. We did the rollout in Manitoba, Saskatchewan, Ontario. We also have plans to roll them out in additional Canadian provinces, subject to regulations evolving. Offering these products, again, they help us to further differentiate our stores from our peers. And now that we have the size and scale to bring these products online in our stores, it's providing another differentiating opportunity, and it's providing another margin boosting opportunity to our stores, which again, the independents cannot do because, they're just smaller in size and scale. Even the smaller regional chains are not able to accomplish this. It took us quite some time to be able to roll out these products because now we have the right size and scale to do so. And the fourth and the final point I would say, Andrew, as a, key pillar of differentiation also is that we offer a very large selection in our stores, and we have also a very different looking retail environment. So our stores are very open and shoppable. And, we get a lot of compliments in our stores when customers come and they see cannabis products and accessories displayed openly in the stores, which they can see, and they get very excited about it, which is a little bit different than some of the other stores that we see here in Canada and also in the United States. And then also, the second part to that is our selection. We carry a very large selection of consumption accessories and high quality cannabis products, which is, I would say at least 500 to 700 more SKUs than any of our next other retail competitors. So I believe we're also winning on that front. And then, we're also very excited about launching Cabana Elite, which is our paid version of the Cabana Club. And nothing will change for existing members. They will get to keep all of their existing benefits, but for a very nominal fee, Cabana Elite members will have access to exclusive accessories, exciting promotions, and unique specials on cannabis, etc. And we anticipate focusing our first year on getting as many signups of Cabana Elite as possible. Eventually, subsequent to the first year, which is starting second year onwards, we're going to start, realizing a massive financial impact of this very high margin and high margin revenue stream, which we will feel in subsequent years. So our goal in the first year is to get as many members converted to Elite as possible. And then, just the vision 2 to 3 years out, I would say, the long-term vision or the 2 to 3 year out vision is to have at least 250 Canna Cabana stores operating across the country.
That's great. And if I could ask just maybe a quick follow-up on Cabana Elite, and but before we move on to our next full question here, that's a very innovative idea. I don't believe I've seen that utilized in Canada before in Canadian cannabis retail, and it would emulate in many ways kind of the Costco model. And so 2 points. First, am I correct in saying this would be the first time there's a paid for membership subscription program for cannabis retail in Canada? And so that's innovative. And then secondly, this would be a high margin revenue stream for the business over time that you earn from these subscription models. Are both of those points fair?
Yeah, it's completely accurate, Andrew. My thinking is, and as the research as we've done, it's not just Canada, it's also the first of its kind opportunity that we're about to launch here in Canada, but it's North America wide, or even in Europe, we haven't seen a similar paid membership for cannabis play out. And it's absolutely modeled after Costco. I'm a big fan, just like they have their Kirkland brand, we have a lot of our own in-house brands. We're very focused on the Cabana Cannabis Co brand. And, having this diversified ecosystem, we can collectively offer some amazing benefits to our Elite members, which other competitors or which our peer group does not have access to. So you're absolutely right on both points. And it is a very high margin, high revenue stream opportunity. This revenue will go straight to our bottom line. Like I said, the first year, we're more focused on signing as many Elite members as possible. Second year onwards, once they try, what an amazing program this is, and they see the benefits at minimal risk, when they try, I think they're going to become our permanent Elite members, where we will start realizing some really good financial benefits.
Great. We look forward to watching that program develop. Moving on to our second question, and this is on the topic of M&A. M&A has been a very important driver for High Tide in High Tide's past, including such landmark acquisitions as Meta Growth, New Leaf, and Blessed CBD. How does High Tide evaluate M&A transactions to make sure they are accretive to the business? And what can we expect from M&A going forward? And how long of an M&A pipeline do you see ahead?
All great questions. So, yes, we've been very active in M&A, and we made sure that all the deals that we've done have been strategic and accretive, and as growth by acquisition is a material part of High Tide strategy. Our M&A pipeline is always full. However, given our depressed stock price, which a lot of other stocks are in the same territory, cannabis stocks, we are being very careful and very selective to only pull the trigger on the deals and the opportunities that are most compelling. And this is why, Andrew, we have paused on larger M&A transactions. We have a lot of opportunity, but we are not going in that direction, because you either raise capital to close these deals or you issue more stock, and we are being very mindful of that. Our acquisition strategy is based on two key principles. First, the transaction has to be a good fit within our ecosystem, which is retail focused. So it has to be a retail focused opportunity. And they also have to be a federally permissible, obviously legal opportunities within the cannabis and adjacent markets, or cannabis and ancillary markets. And then, second, which is a very important one as well, we always go with the track record and actual results of the company that we are purchasing. We don't make decisions based on speculation or hope or things will get better or growth projections. We don't buy turnaround stories. We're very focused on buying it on a multiple of positive EBITDA. And we always ensure that, any of the companies that we are purchasing, we are buying them at attractive multiples, so they are immediately accretive to our results. At the end of the day, anything that we purchase, we want it to be a good strategic fit. We want it to add cash flow to our reserves. And we also want it to be, accretive to our existing shareholder base. And then on your last question regarding current M&A opportunities, Andrew, we have so many opportunities on the brick and mortar front. We can continue to consolidate brick and mortar opportunities in Canada. We also have opportunities in front of us on the CBD and the accessories front. And given our scale on how big we are now, and given the proven execution, we have become kind of the acquirer of choice for many of these companies that are looking for an exit today.
That's great. If I could ask a follow-up on, you spoke to M&A multiples being particularly important. Since HITI's been so active with M&A, you've certainly got some examples that you can maybe elaborate on. What kind of M&A multiples are you targeting in, let's say, brick and mortar retail? What have you been able to acquire stores at in the past? And then what do you think that will look like going forward on a multiples basis?
So Andrew, as I mentioned, because we've become the consolidator of choice, we have a lot of inbound opportunities coming into us. We're also continuously looking for what are the good opportunities that we can acquire. And we practically set the stage for what these stores are worth. In Ontario, typically these multiples that we can close stores on are roughly 3.5 to 4 times. We have done that very, very successfully time and time again. Saskatchewan and Manitoba will be very much in line in comparison to Ontario because they're kind of similar markets. British Columbia, Alberta would also be the same, about the 3.5 to 4 times, and we've been very disciplined with that across all 4 provinces. And then British Columbia, I want to remind your listeners that BC is a very differentiated cannabis territory in Canada. BC only has a maximum allowable of 8 stores that you can get as an entity, versus Ontario is 75 stores. Alberta is unlimited stores. Saskatchewan, Manitoba, unlimited stores. So BC is a very particular place, and we were, fortunate enough to close a deal at 5.25 times trailing 12 months EBITDA that we just recently did and recently disclosed. And that's kind of the going rate at BC. We've seen it at 5, and we've seen it at much higher than 5. But overall, Canadian cannabis retail can be consolidated at these multiples, and these opportunities are never ending. We seem to get a lot of deal flow, but we're just being very, very selective on what we want to press the trigger on, and being patient for our share price to recover. As we're all trying to get out of this capital markets mess we find ourselves in.
That's great, and very pleased to hear that those levels of multiples are out there. 3.5 times to 5 times EBITDA is obviously quite a healthy implied cash yield on those businesses. So we look forward to seeing more of that. Moving on to our third topic, High Tide is an international business with operations in Canada, the US, the UK, and the EU. Could you speak to the relative importance of each of these geographies today for High Tide, and how this might change 5 years into the future? How does High Tide capitalize on international growth opportunities, perhaps outside of your home base of Canada?
Sure. So currently our Canadian operations drive the vast majority of our business, Andrew. They're about 85% of our revenue as reported in our Q3 results that we disclose in mid-September. The US is currently our largest international jurisdiction. We have roughly 3 million customers in our database who have purchased, pipes, bongs, vaporizers, rolling papers, CBD, hemp-derived CBD products. And the vast majority of these customers live in the United States. Approximately 80% of this customer base of the 3 million customers that we have live in the US. So, talking about the 5-year horizon where we see the most upside is absolutely the US market. So as regulations evolve and as regulations ease through maybe a descheduling event that that we're now talking about, a potential possibility, or a full federal legalization event, we intend to start selling our existing US customers THC products online and supplement that with bricks and mortar operations in the US. Andrew, we have proven that we are the best operator in Canada in a very competitive and a very difficult and restrictive Canadian environment. Based on this precedent, we believe we can be a top 5 multi-state operator in the United States in the long term, once allowed, obviously. And then, sorry, you asked me a question about the EU market. In regards to the EU market, we have also moved into the EU market through the Blessed opportunity. We have acquired Blessed CBD, which is one of the top brands in the UK for CBD. We sell our CBD products all over UK. We also organically entered Germany through the Blessed brand. So we're also offering Blessed CBD products in Germany. And then we are constantly evaluating more opportunities in the EU market based on consumption accessories and CBD products, and actually also THC in emerging markets like Germany, which is a very important and particularly exciting market for HITI.
And while we're on the topic of Germany, those regulations as we're speaking today are just kind of being rolled out and decided upon. Do you see an avenue that would allow HITI to participate in that market potentially on the THC side? Is that something that's likely? And if you do have the ability to participate, is that a market where you would intend to be active on the THC side?
Absolutely. So we're very in tune with what's happening in the German market. I attended the ICBC conference with our head of GR, Omar Khan, and we had a great trip, and we met a lot of interested parties that were actually interested in doing business with HITI. Without giving away too much, we have a lot of inbound interest as well to partner up with a company like ourselves to bring the Canna Cabana brand into Germany, Andrew, which is an extremely exciting opportunity for myself, for HITI. Germany is at least 2 times Canada in terms of the population. It's it's an affluent market with tons of disposable income, and we think we'll do very, very well in Germany. And our discount club model is extremely well received in Canada, as you can see through our results on constantly putting out great numbers here. And I don't think it'll be any different in Germany. I think we'll go and we'll get a nice market share to ourselves when we enter the German market. And we are very much in tune with what's happening in that market, and we anticipate retail sales opening up maybe first quarter of 2024.
That's awesome. Thank you for that, Raj. I have a couple of ESG questions I would like to ask you. And the first one is, what's management's view of HITI's overall maturity status of its existing ESG policies, processes, and systems, and where might that need to improve?
So look, corporate social responsibility is at the core of everything that we do at HITI, and this is heavily ingrained in our corporate culture as a company. We discuss that a lot at our company, and we want to do a lot more. But currently, the initiatives that we are working on includes, for example, our support for World Vision. So we currently sponsor 2 children for every retail store that we open. We currently have 282 sponsored children through World Vision, and we will continue to add to this number as our business grows and our store portfolio grows. We also support a number of other charities and humanitarian causes throughout the year, and especially during the holiday season. If your listeners want to learn more, they can visit hitiding.com/rising tide for good. And then, on the environmental front is the one area where I feel, Andrew, we can really improve as an industry because of the environmental impact of cannabis. As retailers, we don't need a lot of electricity and water, but the producers do. However, a lot of the cannabis products that we sell in our stores, they tend to be overpackaged. And I hope this course corrects itself, or, this is right-sized over time, again, as regulations evolve, because a lot of these things are actually being discussed with the various governments right now. However, we are doing our part today, Andrew, by doing what we can. So we partnered up with Rewaste out of Edmonton. And what HITI is doing is we are providing our customers a platform by installing these Rewaste recycling bins on all of our 141 locations where customers can come and drop their cannabis packaging, and it's irrespective of where they purchase this packaging. They can buy it anywhere, but we are more than happy to recycle this for our customers. And this is actually these recyclable products are being again used, and there's new products created from these recycled plastic flakes. So it's a very, very good initiative that we are backing. And as you know, this is just the beginning. We look forward to doing a lot more, in the communities that we operate in, for our world and for our environment, because we're all part of it.
That's good to hear, the initiatives you have in the market and supporting communities. I know as we're speaking, I believe Health Canada has kicked off a review of cannabis policies and compliance rules, and hopefully, as you pointed out, hopefully one thing that might come out of that is more flexibility in packaging options and solutions to reduce the waste produced by the industry. And I think that would be a good outcome for everyone involved. A second ESG question and our final question today. I'd like to ask you about what's the biggest challenge HITI is experiencing in the business, and what are you doing to mitigate or manage that, and how are you thinking about that a few years down the road?
Sure. So, there's always challenges. There's no business that does not have challenges, but, you just need to keep going, overcome these challenges. And two main challenges that come to my mind, first one would be to just find staff to keep up with this exponential growth that we are experiencing. The growth is never ending at HITI. We've grown 1,940% over the last 3 years. And it's really hard to find staff, which has the expertise and the skill sets across, the retail and tech and finance, etc. But having said that, I'm eternally grateful for the team that we have brought together at HITI, Andrew. We have one of the best team in the business of cannabis that's doing its best every single day to collectively stay miles ahead of our competition, and we are doing that every day. And then, the second challenge, which is an important one, but also a temporary one, is access to capital, right? Like, we know the state of capital markets is depressed, and the state of cannabis capital markets has been gloomy for quite some time now, and we don't know when it will rebound. But and then again, unfortunately, also, despite of our superior metrics, then happy to share with you, and you already know how good we are doing. We are still judged in that same overall negative sector sentiment. So, we just reported that we are now on a $400 million annual run rate trajectory. We have had a 10th straight quarter of positive adjusted EBITDA. So, given the opportunity, and I really look forward to demonstrating that what we can do to add value to our shareholders when the capital markets rebound. Inevitably, it's going to happen at some point where we can raise a larger war chest on more attractive terms, and how we can deliver on that for our shareholders.
And I think, to put this into context, HITI recently came off about $30 million of capital raises, $11 million of new equity, and $19 million of new debt. So the results that you're demonstrating to the market are resonating, and that's certainly helping with access to capital. But maybe when you're seeing so many M&A opportunities in front of you, new markets such as Germany opening up, potentially, and hopefully the US within a few years, there's clearly a demand for capital that's ongoing, and hopefully that continues to improve for you as well. Well, thank you very much, Raj. I'm very, very happy that we had the chance to speak again today. It's always a pleasure. HITI is listed on the TSX Venture Exchange with the ticker symbol HITI, and on the NASDAQ exchange under the same ticker symbol. It's a Q4 top pick for Q4 2022 top pick for Echelon Capital Markets. And Raj, we very much enjoyed having you join us today for this Q&A video. So thank you very much.
Thank you so much for having me, Andrew. And I have to say, I agree with your analysis. You're a very smart analyst. Thank you.
I hope so. Thank you.